Right now is DCM Shriram. Remember they have interests in many sectors: sugar, fertilizer, chemicals. They have a windows, they manufacture windows and doors, which is sold under the brand of Finesta, and lots others. Now they came out with the Q1 numbers. It was a steady set of numbers. Revenue saw an uptick of 12%, margins expanded. To talk about the quarter gone by and the outlook, Amit Agarwal, Executive Director and Group CFO at the company, is now with us. Thank you very much, Amit, for joining in. So just to get the big picture in and the outlook for FY26, I think last time you spoke about a revenue growth of 10 to 15% and margins in a wide range of 11 to 14%. Is that on track? Could you narrow the margins a bit? Would you be closer to the upper end, lower end? How are the next 3 quarters likely to shape up for you?
Yeah, I think what I had, the trend that I had given, or the range that I had given the last time, we're pretty much on track. We expect a little bit of upward bias, probably in Q3 and Q4. So yeah, we are pretty much on track.
So upward bias on revenues or margins? I mean, could you narrow it down on top line and margins? Yeah. The first half, second half, full year.
Yeah, so see, we have been investing in growth over the last 3 to 4 years. If you see, we have made significant investments of about 4,000 crores in various growth initiatives. Those growth initiatives have started yielding results. Even for the Q1, if you see, majority of the top line as well as the bottom line growth has come from the investment. So that's all volume driven largely. So we expect that to continue, and therefore the numbers in this financial year should be better. And on top of that, we have a steady pipeline of investments. We have done 2 acquisitions in last 2 to 3 months, and we are exploring more. So I think there's a good pipeline which would lead to the growth of overall business, and therefore we will see good top line and bottom line numbers.
Okay, so you are saying that you'll be growing 10 to 15%, something that you had guided for before, and margins as well between 11 to 14%. Amit, the big talking point has been the ADD on PVC. When is that likely to come? Has there been any discussion on that? And what would price increase be once that ADD imposition comes in? How would that impact your company overall?
Yeah. You see, on ADD, Supreme Court did give a positive judgment where they stayed the order of the Gujarat High Court. And now the Ministry of Commerce is working on studying that again. So we hope something to come in next 3 to 4 months. In terms of the impact, I think the prices should go up by about 5,000 to 6,000 rupees per ton of PVC once the ADD is imposed.
Okay.
Amit, good morning. Thank you for joining in. In your previous interactions, you have mentioned that a large part of your bottom line going forward is likely to be driven by the chemicals business. But with the volatility that you have mentioned in the caustic soda prices and the fact that you are expecting them to continue to remain volatile going forward, how is that likely to impact the chemicals business and overall your bottom line as well?
Yeah. You see, what has changed vis-a-vis last 2 years and is that our cost structures are much better. Therefore, our cost of production has come down by about 14 to 15% in last 1.5 years. And that's a big plus for us. As far as prices are concerned, they will be range bound. So that range can be anywhere between 27,000 ECU per metric ton to 32,000. That's the kind of range. So which is we are quite comfortable, given that our cost structure has improved significantly. And then we are growing on volumes. So I think a lot of these factors are playing out well for us.
You spoke about the 2 acquisitions that you closed recently. I think DNV Global Private Limited, which helps in backward integration of your Finesta brand, that's windows and doors. And you've also signed a definitive agreement for 100% acquisition of Hindusthan Speciality Chemicals Limited.
Yes.
How much will these 2 add in the coming year? What was the rationale? And you spoke about exploring more acquisitions. So what's the cash in the books and what are you looking by way of M&A in terms of adding to your portfolio?
Yeah. So in terms of these 2 acquisitions adding to our top line, so their existing capability is to add anywhere between 300 to 400 crores to the top line, both these 2 acquisitions put together. But then, these are small, and our objective of taking up these acquisitions is to grow these businesses because we always wanted to get into these businesses. The idea was whether we do organic, and which will take us about 2 to 3 years, even to reach that 300, 400 crore turnover. But now we are getting that jump start and we can grow from here. So I think these will take, let's say, 2 to 3 years to be, really big and adding significantly to our top line. But then we have made a good start. And then in terms of cash available in the books, I think the way we look at our businesses is that what is our debt to EBITDA? Currently, debt to EBITDA is around 1.1, which is very healthy. And therefore, we have enough cash on the books to do acquisitions.
Got it. Amit, one pain point in the business has been the sugar business. Say, be it the macros, be it the conditions that the industry keeps seeing. This is one business that continues to be under pressure. Do you think at some point in time you will demerge it and unlock value in the remaining business? Also, in terms of ethanol blending, what is the maximum limit which is permissible for ICE vehicles now?
So, see, what the government's plan is on the blending is 20%, which they have almost achieved. And what we hear is that they plan to increase the blending program from 20 to 25 and then take it up to 30. So, which is a positive for the industry. But I fully agree with you that sugar and ethanol, the way it is regulated and way certain regressive measures are taken by, either the center or the state government, it does trouble the business. But we are taking a little different approach. We are saying, how do we really strengthen the business on a more sustainable basis, whatever is in our control? So we are working more aggressively now with farmers to increase their yield, which would mean more consistency of sugarcane for our plants, because we are probably able to operate at 80% capacity utilization, given that the cane is not good enough or it's coming down. And also working on the recovery, which is like what is the sugar content in the sugar cane, working with farmers to improve that as well. So I think we would like to work on the cost side or in this business more aggressively than what we have been doing till now to improve the health. That is one part of it. And then we are looking at certain other things, what we can do in this business, which are add-ons to sugar and ethanol, like we did CBG very recently, which is like we commissioned in March. And now it is operating at 92% capacity utilization. So probably we have capability to do a couple of more CBG plants. And few more thoughts are in pipeline. So hopefully this business should be healthier going forward, but not immediately. I think this year I do see it, maybe at same level last year or a little bit under stress.
Amit, does those lots of thoughts translate into potential new product launches as well? You had mentioned that you've launched 8 new products. What is the kind of incremental revenue you're expecting from these 8 as of now? And is there or are there any further product launches that are lined up, if not in the first half, in the second half of the year?
Yeah, so this is regarding our Agri inputs business, Shriram Farm Solutions. So if we see in last 15 months, we have launched close to about 70 new products in our crop nutrition and crop protection category, other than seeds. Seeds is a regular life cycle where we keep launching new products. Now here, out of this 17, we are getting good revenue, but then it takes time to ramp up these volumes of the new products. Now, if we look at the product that we have launched over the last 3 years, so the total revenue from the new products out of the total revenue that we have in this business is almost about 20%. So which is quite healthy if as a benchmark to have 20-30% of your revenue coming from new products. And our endeavor would be to increase this and therefore we are ramping it up further in terms of introduction. So like as I mentioned, 70 new products in 15 months, out of that 8 were launched in Q1. So we will have a good pipeline going forward as well.
All right, take that point. Amit, thank you so much for joining in with your thoughts and the outlook going forward. That's the word coming in from DCM Shriram. They maintain their FY26 guidance and talk about new launches as well. And that sugar business could either be flat or could actually see some pressure in FY26. We'll slip into a short break now. Up next, we'll discuss the market fundamentals with Jyoti Vardhan Jaipuria, founder and MD of Valentis Advisors.